Good afternoon, everyone, and welcome to Stock Market Today. Ali Corbin, Ed Carson here with a look at the action in today's session. And with the upside reversal that we saw for the NASDAQ on Monday, a continuation of that strength was expected today, Ed, and that's just what we got.
Yeah, so it's nice to see. We'll see if that bounce can really develop into something further, but we saw Apple doing very well, continuing to bounce from its 10-week line. We saw Zim integrated shipping make a breakout, and Ovintiv is making some bullish moves as well.
All right, well, let's take a look at those. But first, a look at the major indexes. And the NASDAQ Composite led the gains today, up about 1.4%. The S&P 500 and Russell 2000 up about 1% apiece, and the Dow up about 0.5%. So we came down to the 200-day line Monday, reversed higher, and now a continuation of that, getting back above that 15,000 level. So this is a positive development. Doesn't necessarily mean by any means we are in the clear. The market still has a lot to prove itself to us, but a step in the right direction for sure.
Yeah, and that's the way to it. It's a step in the right direction. We really needed a bounce. You could argue that we were due for a bounce. There's a lot of various indicators suggesting we were ready for it. The 200-day line's a great place for that to happen. We'll just have to see if it lasts. We've had bounces before, rebounds that don't last. So there's still a lot of growth names, still a lot of trouble in that regard. So we'll just have to see. It was nice to see Fed Chief Powell. He sounded a little bit not dovish, but less hawkish than some of the Fed minutes from last week were. So that was a sign maybe that eased fears a little bit, or maybe just that he didn't say anything new to freak anybody out. But that seemed to help out. Nice to see this bounce, but a lot more we need to do.
Yes, and I'm glad he didn't blink wrong, Ed, because you never know. The markets could get spooked by any misstep or perceived misstep from Powell. But it's an ongoing story, so it's sure to continue to move the market, or at least have the potential to move the market either which way. And let's also take a look at the S&P 500. We have the S&P getting back above the 50-day line, so that's good to see as well. Also back above the 21-day line.
Yeah, so that's nice. And again, most stocks are going to follow the major indexes. So you look at the NASDAQ, you look at the S&P, there's some bounces, but there's still some work to be done. There's damage. I mean, it was a pretty sharp drops on some of these. Definitely not as bad on the S&P, and
Right.
just have to see, but yeah, key levels here, see if it can keep on moving forward.
Yeah, the S&P continues to look stronger than the NASDAQ. And how about the Dow? Blue chips today coming down to the 50-day line, bouncing higher off of that level above the 36,000 mark. And small caps, so a quick look at the IWM ETF, which tracks the Russell 2000, trying to bounce. But this is an area of the market, Ed, that really has a long way to go. I mean, we've been talking for months on end how breadth is an issue, and we still need a lot of progress in that area.
Yeah, every time it seems like maybe the market is broadening out, that we're really going to see some real strength, it tends to weaken again. It's just been a tough road, and so you really want to see this to recover, get above the 200-day, get above the 50-day line and beyond, make you sense that this is one reason why it's been so tough to beat the indexes, because most stocks are falling or at least going sideways at best in a very choppy fashion over the past several months. So it's just been really tricky. And so definitely want to see that breadth improve.
And Apple, a standout in today's session and really the last couple of months, Ed. So it gained about 1.7% today. We have earnings a couple of weeks away. But even though Apple wasn't able to hold above its 21-day line in the recent downdraft, it's now back above that level. And on a weekly chart, Apple even presenting an add-on buying opportunity this week for existing holders who bought out of that cup with handle, or potentially even other investors looking to get into something that is showing relative outperformance.
Yeah, you could. I mean, you could start a new position here. Add-on might be safer because earnings are coming up and the market's under pressure. I mean, you just how much should you be buying stocks, period? Especially out of the super hot energy and financial. On the plus side, its price to earnings ratio isn't as high as some others. I know we don't normally talk about that, but we know how hard hit in the past few weeks those super high PE stocks have been. And that often happens in bad markets. The more highly valued ones come down more. And the relative strength line is right at highs. So it's just, while it's come down, that's holding up very well. And when this is compared versus the S&P 500, compared to the NASDAQ or a lot of the growth stocks, this is looking great. So definitely one to be watching at the very least.
Yeah, it is. And same can be said for Zim, having a nice week, already up about 8.5% in the first two trading sessions. Flipping on over to a daily chart here, clearing a handle today and that round number at 60 and some strong volume to boot.
Yeah, this is the strongest volume in several weeks, because you could have argued a couple of weeks ago, oh, it's sort of peaking up and looking actionable, but there was no real volume and it had run up a lot. So to see this pause at this level, and it sort of formed a new handle, it's pretty short, but it's breaking out in very heavy volume. And this one's tricky, okay, because on one hand, it's breaking out to an all-time high according on a MarketSmith chart, because we adjust our charts after the fact for big dividends. And there was a big dividend about mid-December. So or at least that's when the dividend of record was paid out. So on that front, this was a high handle. It's at new highs, but actually on an unadjusted chart, it's still not at a new high. So, I mean, it doesn't feel as extended or out of base, from a lot of perspectives. Definitely one that's doing well, a lot of payouts, going, so this is still a hot sector. This was a big part of our this was our stock of the day today, because it's doing, it's just showing strong performance once again.
Yeah, it is. And the dividend you mentioned, the current yield over 16%. So Zim also has that going for it.
Yeah.
But should investors be worried at all about the forward looking earnings estimates, or is it just, such a tough comp and an unusual year?
Yes and yes. I mean, look, you have to, it's something you should be aware of. It's not, look, you want to see rising earnings. So to be honest, a lot of stocks are seeing flat or barely moving or even declines. This one's a pretty big decline, but the earnings are so far above where it was before last year. You can argue, well, a lot of dividends are going to be paid out. And they are. I mean, there's going to be a fair amount. So that's something to keep in mind. But yeah, it's part of an unusual 2022 is seeing how well stocks can do in general with a lot of earnings going to be a lot slower.
And last but not least, let's check in on Ovintiv, because oil and gas energy sector continues to be a very hot area, as you mentioned, Ed. So OVV up over 3% today. Recently was able to clear its 50-day line, and this one had a little bit of a short pause before moving higher today.
Yeah, I mean, the best time might have been on January 4th, or when it did pop above the 50-day line. Probably could have already, drawn a trend line as well. There was a lot of energy stocks around this time that did that. But you could argue that, if you look at where that trend line topped previously, that sort of was also an area. I mean, you could almost draw a line. So this pause was right around there. So it feels like that's a little bit. Energy has gone up a lot. Oil is at a 2-month high. This is now considerably above its 50-day line and 10-week line. So if you did take a position, at least a new one here, you might want to make it relatively small, because it would not be a surprise to see oil fall several dollars in the next few days. I don't know where it's going to go, but it's gone up a lot. So so just keep that in mind. A lot of these oil stocks have run, some have already leading. So with such a choppy market, and oil in particular is always this way, but it seems like in this market, you just don't know how things are going to go. Tonight, there was some inventory data. I don't know how that's going to go. And tomorrow we'll get inventory data. So that's something to keep in mind for oil stocks. That's always a little interesting measure for crude oil prices, that data tomorrow.
Yes, and we will continue to keep a watch on this sector, in particular, energy financials, some of the ones that we've really seen perk up in a big way as 2022 kicks off. Ed, thank you so much for your insights. Hope the webinar went well earlier today.
I
How
thought it
was
was a lot of
that?
fun. Yeah, talking about just
Good.
about the new market and just how to use IBD Digital. That'll be up on an IBDinvestors.com, IBD videos, probably by tomorrow. So I encourage everybody to watch that. It's always a lot of fun to do those webinars.
Good stuff. All right. Thank you, Ed. Everyone, be sure to check that out for lots of great tips from Ed and Matt Galgani. And we'll be back tomorrow morning with more on IBD Live. So we definitely hope you tune into our daily morning live stream where we're breaking down stocks that are on our watch lists that are potentially actionable. Sell rules as well. Always got to talk about those portfolio management strategies and the latest take on overall market conditions. So we'll see you there in the morning and right back here after the close.